Hello and welcome to the Friday market update. So there's a 93% chance of a Fed rate cut, but are the buyers already late to the party? So rates are on the move again in a good way, and we're hovering just above 6.5% on a 30-year fixed rate mortgage for prime borrowers. And that's according to Mortgage News Daily, a great online resource. So what's going on? So Jerome Powell and the Fed wrapped up their annual Jackson Hole Summit this week, AKA their summer strategy session in the mountains. I think it's a summer boondoggle, and dropped some seriously rate-friendly hints. The result, Wall Street now sees a 93% chance of a rate cut at the Fed September 17th meeting. But here's the kicker. Mortgage rates don't wait for the Fed. They move based on expectations, not announcements. So that means rates are already dropping in anticipation of the rate cut. So if your buyers are saying, I'm waiting for the Fed to lower rates, they're already behind the curve because the rates are starting to drop. They may already be dropped by the time the Fed actually makes the announcement. Now, tomorrow, I'm holding our Smart Homebuyer Workshop in collaboration with the real estate agent community. It's at the Canyon Gate Country Club. It's from 10 a.m. to 12 p.m. tomorrow. And you can go to lasvegaspitch.com/smart or smart buyer to register any potential clients you have that are looking to buy right now. And you can attend as well. So there's still time to invite your buyers. Just send them the link and we'll track who sent them. And when they get pre-approved, they're sent right back to you to go house shopping. So want to check it out first? Just come solo. Check it out. See what we're doing. You'll walk away with many tools and confidence to help your clients make smart, timely moves. And we're planning on having 2 Smart Home Buyer workshops per month, one in the evening and one on the weekend. So here's a stat that just blows my mind. The median age of a first-time home buyer is now 38 years old, man. It just went up and up and up. And that's right. Millennials are officially getting gray hair. Not quite as gray as mine, but they're juggling kids. They're running out of room in their rental, and they're watching their rent rise every year, year after year. They don't want to be nomads anymore. They want stability, space, and a front door of their own. And they've been waiting on the sidelines as pent-up demand, priced out by high rates or the perception of high rates. You as the agent can actually get them lower rates, as we know. But when rates hit a level that feels affordable, we're getting really close to that, they will jump in fast. This group is massive and motivated. The pent-up demand is ready and waiting. It just needs a spark. And that match is just about to be lit. Seller pay closing costs. Let's talk about that. That's how you get your buyer a lower interest rate and save them money. And you should use that before that disappears. Virtually every deal I've closed in the last 3 months has had some form of seller concessions. We're talking 10 to 12,000 on average. 2 deals had almost 30,000 in credits, and we're actually negotiating one that has 50,000 paying off a solar loan. So that's money that buyers can use to cover their closing costs. And if they qualify for down payment assistance too, guess what? They could buy a home with little or no money out of pocket. So it's hard to save $10,000, right? Absolutely. Right now, that $10,000 can be saved in one day, the day of closing, when the seller hands them $10,000 to pay their closing costs. So, but here's the problem. The moment rates drop lower and lower and lower, those credits start to dry up. They start going away. The seller doesn't need to give them anymore. And when 10 buyers show up instead of 1, they're not going to hand it out. So if your clients are tight on cash, this is their moment to get that free money. Waiting means saving longer, paying more, or getting priced out altogether. So record low sales. It's been low for the last 3 years, plus record high household formations equals market pressure. Something's got to give. Existing home sales have hovered around 4 million per year for the last 3 years, the lowest levels since the mid-1990s. But back then, we had half as many households as we do today. There's just plenty of people waiting to buy. And add in a 3 to 5 million home shortage caused by years of underbuilding, and what do you get? It's not a crash, I hear this a lot. I'm waiting for the market to crash. Ladies and gentlemen, I respectfully say not a chance. Supply and demand are not anywhere near in alignment for a crash to occur. Could you see rates dip a little bit? Absolutely, but we're not going to see this huge decline in values. It's just not there. It's just not going to happen. So a bottleneck of demand waiting to burst. Bottom line, act now before the rush comes in. Rates are sliding down a little bit. Sellers are still offering big credits, so take advantage of the sellers. They took advantage of the buyers 3 or 4 years ago. Inventory is relatively low, but much higher than it was before and growing, so buyers have more options to look at. Millennial buyers are ready to pounce. And guess what? Investors made up 20% of the sales last month. That's normally around 15, 16%. So what do they know that the average home buyer doesn't? They know that it's a good value right now to buy a home. So this is a calm before the storm, and the smart buyers are stepping in now. While the terms are still on their side, it's a buyer's market. When should buyers buy? In a buyer's market. We're going to explain that, express that tomorrow at the Smart Home Buyer Workshop tomorrow. Hope to see you there. This is Gaylord out. Until next week. Bye-bye.